iShares and Vanguard exchange-traded funds, also known as ETFs, are some of the most popular investment vehicles on the market. People often have difficulty choosing between them, and for good reason. Both companies offer excellent products that are often very similar. We're going to go over some of the differences to help you decide which company you should go with. iShares is a series of ETFs under global investment firm BlackRock. iShares has over 350 ETFs covering almost every sector you can imagine. iShares also has very specific ETFs that have a narrow target segment, for those investors that like to build up their own custom portfolio piece by piece. Vanguard also offers a wide range of ETFs, but their portfolio doesn't have quite as many options as iShares. Vanguard has close to 100 ETFs versus the 350 plus that iShares has. For the everyday investor, the funds that Vanguard offers are more than enough, and probably less confusing than the massive amount of options that iShares has. Vanguard is more known for their broad market and all-in-one ETFs when compared with iShares. So, which company should you buy your ETFs from for your investment portfolio? In general, we think you should go with iShares due to the wide selection and competitive fees. However, do take the time to check out the equivalent offering from Vanguard, as there are certain ETFs where Vanguard is better than the iShares equivalent. Here's what you should be looking for when comparing specific ETFs. First, take a look at the fees. This will be listed as a management fee or MER, and will be displayed as a percentage value. For example, the fee for owning the ETF might be something like 0.1% of your invested money. Lower is better. Second, review the asset allocation. Even ETFs targeting the same segment will have different asset allocations. For example, the iShares XGRO and Vanguard VGRO are both growth ETFs that are heavily North American focused. However, XGRO has a higher allocation to US equities than VGRO. Is that good? You'll have to make that decision yourself based on what else you have in your portfolio. Third, check out the historical performance. Make sure your ETF does what it says it should do. For example, if you're looking at an ETF that's supposed to track the S&P 500 index, then take a look to see how well it actually tracks. Based on how the ETFs are constructed, even index ETFs can have slight performance differences. It also doesn't hurt to make sure that the ETF has consistently produced good returns. Fourth, look into the liquidity. This is a fancy way of saying you can buy and sell your ETF whenever you want. Remember that unlike mutual funds, ETFs are bought and sold from other people or institutions. This means that when you want to buy or sell your ETF, there has to be someone there to sell or buy the shares. If an ETF is illiquid, it means that there are lots of people looking to buy and sell that ETF, so it's very easy to trade it. Finally, see if the fund is eligible for auto-buy. Some people like to set their investment accounts such that it automatically buys certain ETFs at regular intervals, for example, after every paycheck. Regularly buying an investment rather than dumping all of your money in at once is called dollar cost averaging, and allows you to lower your chances of buying in at the peak price since you're spreading out the purchases over time. Make sure that your investment account can do auto-buy for both iShares and Vanguard. There are still some brokers out there who will only do auto-buy for one or the other. In conclusion, iShares and Vanguard are both leaders in the ETF industry, and you can't go wrong buying from either one. For the ETFs you're considering, you'll have to do a bit of research and compare them across the dimensions we listed above.